get by. It resides between my eyes. Walk through the fire, came out better on the other side. See, life's like a beach if you find the sand. And right now, I feel like 100 grand.
You are listening to Inspired Insider with your host, Dr. Jeremy Wise.
Dr. Jeremy Weiss here, founder of InspiredInsider.com, where I talk with inspirational entrepreneurs and leaders. Today is no different. I have Edward Woodford of Zero Hash. You can check him out at zerohash.com. Edward, before I formally introduce you, I always like to point out other episodes of the podcast people should check out. Since this is part of, I would say, SaaS series, some interesting ones. I had one of the founders of Zapier on. That was a really good episode and how they built it up. One of the founders of Pipedrive. I think Edward and I had them on. They had 10,000 customers. Now they have over 100,000. And a Weber and just many more, and kind of that SaaS journey. And so interesting. Check them out on InspiredInsider.com. This episode is brought to you by Rise25. At Rise25, we help businesses give to and connect to their dream relationships and partnerships. We do that in two ways. One, we help companies launch and run a podcast. So we're an easy button. We do the strategy, accountability, and the execution. Number two, we are an easy button for companies' corporate gifting. So we make gifting, staying top of mind, easy, simple, seamless. And for me, Edward, I always like it to be affordable. So people send us a list of their people. We do everything else to curating the gift, sending the note, packaging, logistics, and everything. So we kind of call ourselves the magic elves that run in the background to make it look easy for the company to build relationships on the podcast front and also on the gifting front. For me, the number one thing in my life is relationships. I'm always looking at ways on how I can give to my best relationships. I found no better way to profile the people and companies I most admire and having them on the podcast and sending them tasty treats in the mail as well. So you can go check it out, rise25.com, or email us at support@rise25.com. I am really excited to introduce Edward Woodford, is the founder and CEO of Zero Hash. Zero Hash is a leading crypto infrastructure platform. It's trusted by industry leaders that you've heard of, like Stripe. We use Stripe, Franklin Templeton, Shift4, and Interactive Brokers. Zero Hash has actually secured over $170 million in funding with companies such as Bain Capital Ventures, Point72, NYCA, and Tasty Trade. And they've settled over $45 billion in transaction volume and onboarded 5 million plus people to the crypto and stablecoin economy. Edward, thanks for joining me.
Yeah, no, thanks for having me. Great.
Super intro. Impressive with what you've done. Just talk about Zero Hash and what you do. And as you do that, I'm going to pull up your site so people can check it out.
Yeah, so our goal is to allow people to build on crypto and stable coins. Ultimately, we view cryptography as a technology as opposed to a standalone asset class. And so we provide the infrastructure via both APIs and SDKs to abstract away the complexity of building on this technology stack, as well as some of the regulatory and technical complexities around doing so. So for example, if you take stable coins, there are increasingly more stable coins. Some people may have heard of Tether, for example, or USDC. Bank of America, for example, announced that they were thinking about launching a stable coin. So there's ever more fragmentation. And one of the nuances there is that stable coins are built on multiple chains. So our goal is to allow our partners to think about account-to-account transfers, as opposed to needing to think about, okay, Jeremy wants to receive USDC.sol, but Edward wants to send USDT. Or, for example, I want to send USDC.eth. We abstract away all of that complexity to enable partners to leverage this technology to fundamentally disrupt the way that they move value, and allow partners to do that in a very seamless way and lower the barriers to entry to doing so. And you mentioned some of our partners: Interactive Brokers, Stripe, Shift4, Nuve, Franklin Templeton, and others all leverage us for that infrastructure.
Talk about that a little bit, Edward. So you could choose any of them, Franklin Templeton. How does it work when you partner with the platform?
Yeah, so one of our fastest growing products is what we call account funded. So I'm sure many people have a brokerage account or a trading account, or for example, a fantasy sports account. And as you think about that, there may be an opportunity on a Saturday or Sunday, and you can't use traditional rails to do that. So a great example here is, for example, Cowshe. Cowshe provided the opportunity for the first time for people to speculate on the election. So the election was on a Tuesday. So the problem set that their customers faced is if you're using ACH, there's a 2-day settlement period. So the only way to actually fund that account in a seamless way was through stablecoins. And so the value of stablecoins is that you can leverage them 24/7, 365. They're instant, they're low cost, and from the platform's perspective, they're irreversible. So there's no chargeback risk. So they can give a lot more. They can raise limits on customers that are using stablecoins. And so effectively, at the end of the day, this flow of funds is really, really simple. Cowshe wants to receive USD. Cowshe wants to receive USD, and the customer wants to leverage USDC from, for example, they may have an account at Robinhood, they may have an account at Coinbase, they may have an account at Venmo. And so they can leverage their existing account to fund their brokerage account at Cowshe instantly, seamlessly, and cheaply. And that's the beauty of it. And I think what people don't quite fully appreciate yet around stablecoins is in the last 18 months, 750 million people around the globe now have access to a stablecoin through a primary account. By that, I mean where you already have money. So think of the number of customers that now have a Revolut account, a Robinhood account, a Nubank account, a PayPal account. All those people now have access to a stablecoin. And so what our goal is to make that alternative payment method really, really easy to embed. And that example was just one of those examples through an account funding mechanism.
I do want to hear what's interesting is there is an interesting evolution to zero hash, which I want to talk about. It's not like you just landed on this and you're like, bang, it's all here. It's nice and neat. It started off and it's evolved. I do want to point out, so we'll talk about the evolution, but one of the interesting pieces, we're on the website here, you can see, you could send and receive stablecoin, crypto. Talk about the crypto rewards piece. That kind of stuck out to me as an interesting use case. People are using it from a reward standpoint.
Yeah, so our goal is to allow partners to embed digital assets or stablecoins into the product offering that they see most fit. So one of the opportunities that partners leverage us for is what we call crypto rewards. So this may be, for example, a roundups product. One of a group that I think has done this exceptionally well that is not yet a customer, but I think is very illustrative that most people underappreciate is, for example, Cash App. So for example, when you have Cash App, you can use a concept of boost, and that boost gives you rewards. And so we basically make any company in the world be able to offer a crypto reward in the same way that Cash App does. So we make that very, very simple, very, very easy, very, very seamless.
Yeah, it's very cool, some of the use cases here. So people can check out Zero Hash. I do want to say, if someone's listening, they're like, I am not that familiar with crypto and NFTs and Ethereum and Bitcoin. I did do an episode with Dimitri Buterin, who co-founded Block Geeks. And he kind of, he put it for me, at least, Edward, in layman's terms. So people can check that out. And he did a good job. And kind of going through those things. So check that episode out. Talk about the evolution. You were doing an actual, there was a great interview actually with you and Tom Sosnoff, one of the founders of Tasty Trade. And you were talking about some pivot points.
Yeah.
Talk about that. Maybe start from the beginning, what the original idea was, and we could talk about maybe some of the pivots to how you got to where you are today.
Yeah, so I think no business is a straight line by any means, especially in a marketplace whereby there's constant technological evolution and adoption. And one of the challenges, I think, and I always say this, of building in a space that can be very hot and then very cold, is effectively trying to narrow your emotional bounds as much as possible. Not being overly aggressive when times are good and not being overly fearful. So that's one of the challenges of building in a space that radically changes, and the changes are amplified by, I would say, the public psyche or the zeitgeist, so to speak. But the business started in 2017 primarily as an exchange business, right? We wanted to make it really, really simple for people to do an exchange. And we sat back and we said, okay, if we believe that this technology will be present everywhere. Why are we narrowing ourselves just to people that come directly to ourselves? Why do we make it really easy for everybody to leverage what we've built? And so effectively, we went from what you may call a B2C business and effectively transformed the business very quickly into a B2B2C business. And so that's effectively the pivot. We started saying we're going to be direct to consumer, whether that be institutions or not what. But we very quickly realized that people were coming to us for saying, hey, I care about what you've built on the back end. I care about the infrastructure that you've built, not really the front end piece. And so we realized that our thesis was not cohesive with our strategy, and we shifted into that approach. Of course, it's never a straight line. There's lots of twists and turns. I mean, obviously, COVID was an element where we were looking to raise money during, just before COVID hit. I mean, people forget during that 8 to 12 week window at the start, everything dried up, and then everyone got very bullish. But during that 8 to 12 week period, it was an incredibly fearful time for us because we had a term sheet, we had a raise, and that got pulled. And so there are these twists and turns. There are obviously these macro factors that affect our business. I mean, right now, you've seen very quickly the new administration has made a couple of changes that has radically accelerated the adoption, for example, by banks. And that's just the reality that we are very well positioned, but there are these dominoes that fall. And we're in a place right now where the dominoes are falling very quickly in terms of the adoption of this technology.
Did that pivot come from customer conversations? Like, obviously you were going B2C at first, and then you're like, you know what? It's going to be way more leverageable from a B2B perspective. Was there a specific conversation that sticks out that you're like, yeah, this is an aha for you?
I think the conversation that stuck out was we signed a deal. We were very experimental. We said, okay, let's be experimental. And the first customer that we closed on that was a group called MoonPay. Now, MoonPay at the time was a 4-person company. They're now a multi-billion-dollar business, and they're still a customer of Zero Hash. And in a week of taking them live, we made more money than we'd had in the previous couple of months from our other business. And so it felt very obvious and instinctive that this group there were lots of builders in the crypto and stablecoin space. They all needed what we had built and offered. And so let's be that gateway to enable partners to innovate very, very quickly and accelerate their growth, whether that be small companies at the time, which was MoonPay. And then we started to go upstream and said, okay, the large businesses will also need this tech stack and infrastructure and regulatory compliance piece as well, lowering the barriers to entry. And so it was really that first, this uphill battle that we'd faced on the B2C side, and then very quickly realizing that, okay, MoonPay starts, and then you start to get other customers come very, very quickly. And you start to get that momentum. And momentum is contagious, and it takes on its own form, and we've managed to leverage that.
All this, Edward, is super technical. Talk about the evolution of the team, right? It starts you and the co-founder Brian. How did you meet your co-founder?
Yeah, we met at college, and he stepped away from the business. I think it was shortly during COVID. He stepped away when we were, a 15-person company. We're now a 180-person company. So it's a radically different business from where we were. One of the things I'm particularly proud of is, I think founders, for example, you mentioned Brian. Founders get a disproportionate amount, I would say, of credit. And there's the disproportionate amount of economics. And there is a reason for that going from 0 to 1 and instigating and being bold enough to take that first leap, most people will tend to be followers. But something that we've done as a company that I'm particularly proud of is create the concept of a founding team that is officially recognized by the board, officially recognized in terms of how we build the company, and is a group that I meet with every single quarter, and we meet in person. And this is a founding team of 9 people, including myself. And these are people that were there at the start. Effectively, they all joined within the first year of the company. and are still at the company. And these are people that, some of them are C-suite, they report directly into me, some are IC. And the commonality of these people was that they pushed when nobody else was pushing. They believed when nobody else believed. They stayed when people left. And so I prefer to talk about the story of less about me and less about the founding structure, but more, sometimes we think of these things almost like an immaculate conception of a company being formed. It's formed and it's eureka and it sparks. Really, what I think about, okay, if you think about an analogy of a fire, the fire, we put the wood there, but there was no spark. The founding team was the spark. I created some of the combustion, but that was the spark. That is, to me, what is the start. It's almost like, do you consider the start of the fire when you put the wood down, or do you consider it when you light the match? I consider it when you light the match. And so that's why I'm very proud of our founding team, and why I talk more about the construct of a founding team as opposed to the concept of founders. And I think more and more founders, as I talk to them, are actually buying into this vision. And I see more and more LinkedIn, the concept of founding teams.
You know, Edward, what did you see? I mean, we're talking back in 2017 in the crypto space. Why did you want to even get into this? I'm looking right now at just the max on the price of Bitcoin. Okay. For example, and I'm looking in 2017 and, it's in the, $1,000, $900 range, right? And now it's, at this present time, it's in the $80,000 range. Okay.
It becomes days very quickly.
What did you see then that most people didn't see or weren't even thinking about?
Yeah. So I first heard about Bitcoin. I was at grad school at MIT, and one of my professors, Christian Catalini, started speaking about
By
Bitcoin.
the way, someone's going to listen to this in like 10 years, and who knows what it's going to be at. But yeah.
Exactly. Who knows where it'll be? Like it's a volatile asset, right? But Christian was one of my professors, formed a great relationship with him, and actually he's now the chief strategy officer of a customer of ours, a group called Lightspark, that's leveraging Bitcoin to disrupt the way that we transfer value cross-border. But Christian got me into it. I bought my first Bitcoin at the MIT bookstore, and
hopefully you held on to it.
Yes, I mean, it's
Okay.
you think about I mean, if you think about the amount that you've sold in life, it's a weird place to be, but that so be it. I mean, I'm very indexed towards Bitcoin and other assets in this space, but what really drew me in was,
wait, real quick, how did you buy it? You said, where did you at the
MIT
bookstore?
bookstore? So there was a group called LibertyX, and it's now owned by NCR, right? One of the largest ATM businesses. And I went with some cash and I bought a Bitcoin. And that's effectively how I did it. And so I was very drawn in by two things. One, the construct of removing intermediaries, the construct of a network that can crisscross boundaries, the construct of a technology stack that is available on any phone. And I think equally as important, a decentralization that now can be done on any phone. It's unstoppable, right? Like when you start with Bitcoin, it's so easy. You can't stop it, right? That's a very interesting technology stack. When you think about everything that we do, the construct, and I saw a piece recently about the cost of trust, right? If you look at Uber, I think anywhere between 30 and 50% of each one or each ride is paid to Uber, as opposed to the driver. That's an incredible tax. If you start to think about how you can put identity and credentials and ownership in a decentralized manner at low cost, that has a lot of value. So that was the first piece, was the thesis around it. The second piece was the visceral reaction to Bitcoin of people was incredibly negative. And I like spaces where people self-select out because then there's not many people in the room, right? People say you don't need to be the smartest person in the room. Sure, you don't have to be, but it definitely helps when there's not many people in the room. And then when a lot of people come into the room, you by nature have spent more time there, you understand it better. And so for me, I liked the complexity of it. I liked to some degree, the controversy of it. And it just didn't make sense to me. I felt that people were very visceral, had never read the white paper, had never undertaken the care to actually understand what this could solve. And I liked that. I liked being counter trend, I suppose, to some degree.
What did it take to build this from a team perspective? You know, obviously, when you raise money for the first time, I think in 2018, was there customers at the time? What did it look like when you raised the first Series A?
Yeah. I mean, when you talk to investors, when they look at earlier stage companies, it's typically team and TAM, right? What is the total addressable market? So is the market massive, and do they think this team can address it? As you go later down the pipeline, right? I mean, we've raised our Series D. It's much more metrics driven. It's a different construct. I mean, I still believe that the TAM is completely untapped in terms of what cryptography can do. And I have three core theses. The first is that payments has been completely disrupted. Stablecoins already do more volume than Visa. And we're still so early. It will completely disrupt the way that we transfer value cross-border and disrupt the way that we use intermediaries and the way that we use the SWIFT protocol. That's my first thesis. The second thesis is that crypto as a store of value will exceed gold, particularly Bitcoin, and the way that people store value outside of the United States will also change. So, for example, holding a dollar in a tokenized form with USDT or USDC is fundamentally disruptive and will be a way that people can access hundreds of countries very, very quickly, and any fintech can launch a product globally, essentially overnight. The third is that tokenization and the way that we transfer value today will be fundamentally disruptive. And that's what groups like people like Larry Fink talk about. Tokenization is going to be the most fundamental technological disruption that we've seen in decades. So those are my three core theses. We touch all of them. We have payment clients like Stripe, Shift4, Nuvei. We have brokerage clients like Interactive Brokers, Tasty Trade, and others. And then we have tokenization partners as well, such as BlackRock's Biddle Fund, Franklin Templeton, and others. And those three theses are massive. And I still think we're very, very early. But you have to show that the velocity of the business is growing. I mean, at the end of the day, most VCs, if you're a VC-backed business, it is about momentum. It's about velocity. That's really it.
What does the hiring look like when you raise one of these rounds? I'm just gonna share the screen here. We'll go back to Zero Hash. There's these milestones here. I'm not sure if this is accurate or not, but it's on Medium. So everything on the internet's, I'm sure, accurate, right? But we have Series A, B, C, C1, C2, and then Series D, where it was 105 million.
Mm-hmm.
Talk about the hiring, or what are you using the money for?
Yeah, I mean, I think in terms of hiring, I mean, one is the scale of the business has obviously grown. Like I said, right around COVID, we're about 15, 20 people, and now we're 175. So one is that. I think second is the people that you bring in, and sometimes to some degree, it's a different type of person at different stages of the company. I think there's sometimes a tendency, and sometimes we've fallen foul of it, is trying to bring in people that just aren't at the right stage of the company. And equally, the people in the company have to adapt, right? I have to adapt. The whole leadership team has to adapt. Your job is fundamentally different. A job in a startup changes every 6 months, and either you change or you don't. And there's no shame in that, right? Like, some people love the 0 to 1, and that's an incredibly complex piece. Some people love the 1 to 100, and some people love being at big businesses. That's okay too. But sometimes I think looking back, I think some of the mistakes that I've made is conflating what is a startup versus what is a really mature business. I think everybody likes to use the construct they were at a startup. But if you look at people that maybe have come from, an Uber when there were 8,000 people, in your head you may say, okay, that's a startup. Well, you may think that there's a lot of analogies. An 8,000 person Uber is very different to a 150 person business. In my experience, it hasn't worked. And it's just there's nothing wrong with it. There's just a different type of person. And so in terms of team, I think there's sometimes a tendency that you need to say, we need to mature as a business. And I've seen this a lot, like, very established leaders like Airbnb, Brian Chesky, he's spoken about this in quite a lot of detail. I think there's sometimes an element like, okay, we've got to put, we're a big company now, right? And that's how we have to think about hiring and the sort of people we have to hire. No, our goal is to achieve a lot in a very short period of time. That is a certain type of person, is a certain type of psyche.
How, Edward, have you changed as a leader from the beginning until now? Because obviously growing the company from zero to what it is today.
Yeah, I think I've become more balanced, right? I think if you put accelerator, brake in terms of different pieces, you look at things that are shining, it can be challenging. And I sometimes see this in other leaders at the start of their careers as well, in careers at their own companies. But you can be very aggressive in achieving your goals, but be very balanced. And sometimes I think people believe that you can't. You have to expose how driven you are, or expose how hard driving you are. I think sometimes you don't. And I think becoming more balanced, becoming more measured, is really, really, really important. I drive incredibly hard, but you've got to, I really honestly believe you have to narrow your emotional bounds as a leader. It's not about being unfeeling, but it's okay. The great wins are great, and you got to show that. But the great, when times are tough as well, I'm a big believer in consistency. Whether it be a good day or bad day, you put in hard work, you drive forward, and in the long run, you will be okay. And that's my perspective. And I think if you let your emotions of like, oh, there's this big exciting deal, or oh no, there's this big thing that's negative, you're going to burn yourself out. You're going to burn other people out. And so I think just becoming more measured and mellow has definitely helped me and helped others around me. And I think you can achieve a lot more by being very precise, very driven, and putting a lot of concentrated force in a lot of pieces, as opposed to going in too broad or kind of switching tact and being a little shiny.
I'm curious, as the founder and CEO, when something, there are like highs and there are lows, I'm curious, what is your self-talk so that you do stay consistent? Like if a huge deal comes in, or there's just something bad that happens, what are you telling yourself so that you stay more consistent, like you were saying?
Yeah.
It's like I don't know, sometimes easier said than done. Like I feel like, oh, you have this huge win, you want to get excited about it, right?
Yeah. I think it's about being able to process things quickly, right? So it's of course you get excited, of course you get sad. It's not about being a robot, but it's about how quickly you can process those emotions. And figuring out how you process. For me, it's by being by myself. It's either going for a walk, it's getting a massage, and that's how I process it by myself. Some people have to talk about it, and some people have to exercise. Some people have to, but figuring out what really allows you to go through that emotional response. I mean, we are emotional beings at the end of the day. Allows you, I think, to make better rational decisions, and allows you to look forward. At the end of the day, your job is to continuously look forward. the success of today, something we have the saying in England, today's news is tomorrow's fish and chips paper. It doesn't matter that much, right? It just doesn't. And today's news is old news tomorrow. And you've got to continuously be looking forward. So if you get too caught up in today, it's not about being like, Zen. And by no means am I, have I hit the Zen piece, but it's about that. It's about that processing of that initial emotional response that we all have as humans.
Yeah, thanks for that. I mean, ask selfishly because it's tough sometimes with everything going on. You mentioned, obviously there's a lot of changes. Maybe talk on a macro level on what you see in this space.
In the broader crypto
Yeah,
space?
exactly.
Yeah, I mean, look, I think a couple of things. One, on the brokerage side, the SEC has overturned a couple of very controversial accounting bulletins that they put out, which effectively prevented publicly traded companies, banks, and broker dealers from offering crypto in a meaningful way. That's a huge, huge thing. The SEC has also withdrawn a number of court cases against effectively a lot of the major players in this space. A significant overreach, what people may call regulation by enforcement. So the mindset in terms of crypto is definitely shifted. I personally believe every single brokerage platform, every single bank will have a crypto product in the next 12 months. I also believe every crypto business will have an equities solution as well. So I think this concept of crypto platforms, investment platforms will become one and the same. Secondly, I think every single business will have a stablecoin strategy in some form. It is an incredibly powerful alternative payment method. If you look at, for example, the All In podcast, they've mentioned stablecoins in effectively every episode in the last month. There is a psyche there. You are seeing real businesses adopt this at real scale. And you can look at some of the companies that we power, some of the use cases around that. One of which, for example, is payouts. So freelancers are the largest workforce in the world. There's 1 billion freelancers crisscrossing the world. And I mentioned COVID. COVID obviously changed the way that we think about building businesses, a global workforce. One of the challenges is paying those people on time. And stablecoins can solve that. And so one of the integrations of that is remote.com has integrated stablecoin rails powered by Zero Hash to allow for people globally to be paid instantly and meet the same expectations that we all have, which is to be paid on time. And then when you start to play that out, and this is, you asked me why I'm passionate about crypto, Bitcoin, etc. It starts to break down some of the paradigms that we have. So the way that we're mostly typically paid is that I'm paid for work that I've already done every 2 weeks or every month. Effectively, I'm providing a loan to the business. The reason that we don't get paid every single day is because of cost, typically. And imagine if you could pay people instantly. Now, that may not matter for some people, right? If you're well paid, it doesn't matter. But if you're on the border, it really matters when you get paid. And that completely eviscerates, for example, the industry of early payment or payday loans. That is fundamentally disruptive for a lot of people. So I think it's really interesting as to how not only the use cases that we power today, but how does it change the way that we think about paradigms that we all currently accept? We all accept being paid once every month. It just starts to change the way we think about the world.
Edward, for people who don't know, if you want, I'm going to just share too my screen. Just give a brief definition of stable coin. And you can obviously, if someone wants to research it, I mean, I just found an article and there's lots of information on it, but here's one in Coinbase. What's a stable coin? Could you just talk just briefly, just so people know when you say stable coin, what you're referring to?
Yeah. So stablecoin effectively is a tokenized representation of a dollar or other fiat currency that is built on a blockchain. So what that means is a stablecoin can be built on Ethereum, which means that it's transferred on the Ethereum blockchain. It can be built on the Solana blockchain. So really, it effectively allows anybody with a wallet, effectively a cryptographic wallet, that is increasingly becoming more and more extracted away from the complexity of that, to effectively have a dollar representation that is fully backed by a dollar. And that's incredibly powerful because it opens up everybody in the world that has a phone to be able to access that. And what it does is that it allows, it's a competing mechanism to networks today. So it's a competing network to Visa, MasterCard, it's a competing network to SWIFT. It's a competing way to the way that we move money today and the intermediaries that are involved in that. So that's effectively what a stablecoin is.
I'd love to hear any advice you've gotten, lessons. You mentioned you have the board that that shares things. Also, I'm sure along the way as you're raising money, we mentioned some of those companies. Any advice or lessons you've gotten from the, Bain Capital Ventures or Tasty Trade or NYCA or Point72? What sticks out to you along the journey? Or maybe someone who didn't invest in some advice they gave you?
I mean, the one that I always think about was one of our earliest investors. And he said to me, he said, "You always have the answers to my questions. I'm not expecting you to." And he goes, "If you can't, I need you to acknowledge that there's massive risks to your business because there's massive payoff if you get this right." So he said, "Write an obituary of your business. Why does it fail?" And it fundamentally shifted the way that I thought about things. Risks are also opportunities. If there were no risks, then everybody would be doing this. And so I think it started to shift the way that you don't need all the answers, but you need to know what the risks are and how you address them head on. And I think if you just talk away risks, sometimes it can create concern. And so that was a radically different way of viewing. Like, I thought I had to give answers to all the investors. Like, yeah, this is how we solve it. It's like, no. I mean, that's a well-taken point. But if that risk is, this is how we mitigate it. But it also creates all these opportunities. So I think that was one of the things that changed the way that I thought about fundraising, especially in the early stage.
Yeah, I love that, Edward. So writing an obituary for your business and why it may fail and some of the risks.
Exactly.
Edward, I have one last question. Before I ask it, I want to point people to Zero Hash. You can check it out, zerohash.com, to learn more. And my last question is just about what's next. Obviously there's a lot of momentum in this space and with Zero Hash. What's next for Zero Hash?
Yeah, I mean, continuing to scale, continue for this technology to be adopted by the largest companies in the world, and to continue to accelerate the disruption that this technology can bring to payments, investments, and the way that we transfer value today.
Does that look like more conversations with platforms, or what does that look like on the ground for Zero Hash?
Yeah,
or just contacting every bank that needs to implement, use the infrastructure?
We're already talking to most of these players. I mean, it's really about realizing that and accelerating adoption.
Edward, I'm the first one to thank you. Everyone check out zerohash.com, and you're, from what he says, you're probably using one of these platforms already. So the opportunity is there. I know we are. So Edward, thanks so much.
Thank you very much.
Thanks, everyone.
What I got, you can't buy. It resides between my eyes. Walked through the fire, came out better on the other side. See, life's like a beach if you find the sailing right now. I'm feeling like $100 grand.